Let's welcome in our next guest. Dilip Bhatt of Prabhudas Lilladher is now joining us. Mr. Bhatt, thank you so much for taking out time for us. Could you just tell us that, what are the chances of a new high being taken out very soon? I know that, it's difficult to predict what will happen in the market, but looking at the trend, looking at the strength in some of the large cap names, do you think that it's just a matter of time that new high would be taken out?
Pankaj, I think surely the momentum is very good at the moment, and there is a good amount of tailwind for the markets in terms of the domestic fund flow that is really happening at the moment. So I think, as what you very rightly said, very difficult to say whether the new highs will be taken. Will be taken out, but there are every chances that markets will continue with the good momentum that it is showing at the moment. And obviously, when you arrive at these kind of levels, the rise has been pretty solid and pretty good and pretty one-sided too. So I think some correction is definitely overdue without any doubt. And I think the markets as such certainly remain in a very expensive territory zone without any doubt. And the earnings have to recover very fast, very strongly, to sober down the piece and also to take the markets to the next leg, which obviously will have to be strongly on the support of the good corporate earnings growth, which at the moment seems to be missing in the market. So I think markets will still wait for that particular thing. If it's not a question whether markets can take out a new high, but whether the decisive trend is going to continue, and that will depend a lot on some of these factors, like as what I said, the corporate earnings. More important, how the FIs also really behave, because they have been, in the last 2 months, they have turned positive, net they have turned positive. But it has been a very checkered one. There has not been a very secular trend as what they have done in the other emerging markets. But surprisingly in India, it has been a very checkered. You see alternative bouts of buying and selling, alternate days of bout of buying and selling in this particular market. So I think all said and done, yes, markets can, with the momentum, can go up. But a correction also is long overdue, is what I would really like to sum up.
Right. Markets currently would be about 16.5 times, 17 times 1 year forward earning. Maybe if you take a very pessimistic view in terms of earnings growth, it was about 18 times. What sort of correction do you think would make the markets look good? A 10% correction, markets going back to the 15 level would essentially be decent enough?
So I think the correction maybe from here on, say about 350, 400 points on Nifty or 500 points on Nifty, and then some kind of consolidation should also be very helpful for the investors, because it may not necessarily be a correction in terms of the points. There could be a correction time wise also. So you may just have markets going sideways. So why? Because the earnings, as what all of us are expecting, by third quarter of this fiscal year or fourth quarter of this fiscal year, that is 17-18, we expect that the run rate that we will see in the third quarter of FY18 should give a good confidence for the markets to prepare itself to take it to the next leg. So what I would say is not necessarily point-wise correction, but time-wise correction also will be good enough for the markets to decide for its next move.
Right. In terms of time-wise correction, would it become healthy for the bulls because it would give them a chance to acquire a lot of companies? Always a time-wise correction for a long-term investor is something desired for?
Very much. I think once the markets actually have shown a good confident move, I think this kind of time-wise correction and somewhat point-wise correction also is necessary, because as what I said, the earnings have to really come back very strongly to inspire confidence in the investors and in the markets to take it to the much higher level over next 12 to 18 months.
Right. Just as we were talking to Mr. Bhatt, there are some flashes of IOC at the bottom of your screen, which says that they have increased the non-subsidy LPG price by 86 rupees a cylinder. Don't really think it comes in as a surprise, but definitely it's an update. IOC would not react to this much right now. It's about 1.2% down. For oil marketing companies, it's more about what's happening with ONGC and the merger of any of these integrated players. Maybe that's why it's just not reacting. But this is an update. They have increased the non-subsidized LPG price by about 86 rupees a cylinder. Mr. Bhatt, there are two themes in the market which have been going around. So one is, names like Reliance have gone up, other low PE stocks like, metals have done exceedingly well, telecom has done exceedingly well. And second, there is a lot of M&A buzz into the market. Do you think the market is structurally changing in terms of flows, what essentially, fund managers would do with their incremental flows into the market?
Pankaj, what happens is when the earnings story doesn't really play out, I think we always hear, some kind of substitutes for the earnings, which, as what you said, maybe it's M&As, is a season of M&As, talks about that. And also there is a talk about the reforms, which is really also helping the markets. Now, if we were to really talk about consolidation of the PSU banks, I think that's going to be very good, PSU bank. Similarly, if you were to really rationalize and try to consolidate even in the oil sector, the oil marketing companies, and say one with ONGC, I think some of this will be looked upon very positively by the market as a kind of reforms in the PSU space, which was long overdue and which really needed for it to really stabilize and consolidate and move ahead in the long run. So I think some of these things will really help in the long run, but you don't take a decision based on, event kind of a thing. You don't make an investment decision based on that.
Right. So, what has happened in the markets in the last 6 years is that, companies which were making free cash flows have grown pretty strong and they continue to look very strong. So, something like an IndusInd Bank, which is talked about for a merger. Kotak Bank is also reportedly into mergers with some of the other companies. Some of the other strong financial companies are looking to take debt assets. So, do you think that is now playing out? Last 6-7 years, free cash flows of some companies grew, but now still some assets are under debt. So, you think that M&A theme is now playing out, which could do well for earnings of FY19?
Sure, I think consolidation at this stage is very much required given the situation of some of the companies or some of the banks within the financial space. I think some kind of consolidation will certainly help. Now, whether that will really lead to P re-rating, I think what will happen is we all know that once you take over any bank or when you really absorb, it's a decision which will probably take almost 12 to 18 months for it to be properly absorbed, and then you can see an integrated picture and then see a growth. We have seen what Sun Pharma MD Dilip Bhatt has really said, that merger of Ram Bakshi was actually something which was much more beyond their cup of tea, but it has taken a much longer time, and I'm sure that kind of scenario would be true for any M&A acquisition, especially when you do a very sizable one or when you do a mergers or mergers and acquisition. So I think it will be good in terms of P re-rating, but performance possibly will take some more time for it to come once the whole thing is merged.
Right. In terms of low PE stocks, so something like a Reliance doing very well, it was very under-owned. Any positive news flow is cheered. You think market is now looking at low PE stocks as well? Earlier, the focus was only on high PE, high growth names.
Sure, I think the way the index is really moving, first they focused on, I think HDFC was one of the things which came into the focus for all the reasons that we all know of. Then I think now it's turn of Reliance. Yes, certainly I think as far as Reliance is concerned, it's a case of the stock hasn't gone anywhere for last 3-4 years. And I think suddenly some kind of optimism seemed to be coming in Reliance. Maybe I think performance-wise, possibly it will take some more time because it's a huge thing that they are rolled out. And the bottom line will still, in my opinion, will lag behind in terms of the curve. So that will take some time. But yes, primarily because Reliance hasn't moved and it was available so cheap on a relative basis. If you were to compare the other stocks, Yes, so that reason really worked and possibly will work for some more time to come. But I think overall, as far as metal sector is concerned, it's very difficult to take a secular long-term bet on metals because the very nature of commodity itself is such that it's very difficult to say that okay, it will be good for next 1 year, 1.5 years. Those bets can only be at best can be 3 to 6 month bet or maybe a momentum bet.
Right, but in terms of Reliance, in terms of some of the other names that have recently done well, do you think that when a stock becomes from under ownership to a neutral weight, it essentially could give very strong returns, especially for a big company like Reliance, which can absorb a lot of big funds?
Very much. And that's what I say, as what you also very rightly said, that it's a big cap stock, so one can really buy without worrying about having the impact cost on the stock price. And then on a relative basis, if you were to do that, if you were to compare that, okay, you're holding X stock at 3 times the valuation, and something like Reliance hasn't moved up and still is available so cheap, in spite and despite whatever can be the impact of Geo in the short to medium term on the company's financials. But I think that relative valuation definitely comes into play, and something like Reliance certainly will be lapped up by a lot of people. And as what you say, even if they go neutral from underweight, it can give a reasonably good appreciation.
Right. As you said that Reliance, despite the recent run-up, is underweight. Can you just tell for our viewers that even despite the 10% or 15% run-up that Reliance has seen, still one should look at it on a basis of 2008. So when Nifty was around 6,000, 6,500, Reliance was close to 1,200, 1,250. Now Nifty is around 9,000 and still Reliance is close to 1,250. So that's the relative cheapness that you were talking about?
Absolutely. Absolutely, Pankaj. I think that is what. And during that same intervening period of time, you have seen a lot of companies, whether it was IndusInd Bank or any of the names which you have been taking, their P's have only gone up or their valuations have only gone up in that last 4-5 years. So on a relative value basis, if you were to see that you're getting such a big market cap company at on a relative basis much more cheaper as compared to the other peers, not necessarily in the same sector. So I think that also becomes an inflection point for the stock. And that was expected for Reliance for quite some time, maybe 6 months, last 1 year. But actually it did not materialize, and now we are seeing the inflection point really happening.
Right. Which would be your other large cap picks? Do you think banks, which you have liked for really a long time, especially the private ones, are now going into the zone where earnings performance will lead to performance going ahead and re-rating may not come in from here on?
Are you referring only to banks?
I'm referring to private banks.
Sure. I think within the private bank space, I think Axis Bank looks pretty interesting for me from the current levels. I think that is one bank which maybe in the last 1 month has run up, but I think it still offers a very good scope, a very good potential for it to really go up. I think as some of those problem areas are being addressed by the bank in a very serious way, I think that's one bank which can really go places, and maybe something like a Federal Bank also, which is a quasi-private sector bank, that also possibly looks good. And of course, this Yes Bank, HDFC Bank and IndusInd Bank, they really remain always a part of the core portfolio. So, that's something which nobody really likes to disturb. Yes Bank, of course, has been a recent addition in the part of the core portfolio of many funds. But I think, yes, within that space, these are the two names that really stand out.
Right. Can you also just talk about the NBFC sector as well? Now, NBFC sector is now quite vast and valuations are not that cheap for any of the NBFCs. Within NBFCs, what do you like? Would you prefer housing finance companies? Would you prefer microfinance companies? What do you think essentially can do well?
So, slightly on a longer term basis, something like in the NBFC space, I would like something like a L&T Finance. I think that has a good potential to make it big over next 12 to 18 months. Even that has moved up, not to forget the fact. But I think if you were to take over next 12 to 15 months, I think L&T Finance is a good scope for it to go up. Capital First looks pretty interesting despite its run up. I think the growth continues to be pretty good. Not to talk about the Bajaj Finances, because Bajaj Finance always has been, a stock which is a part of your core portfolio in the NBFC space, because they have been very, their performance has been exceedingly good, and there is no doubt about it that you should, why you should not own that stock. But I'm just talking about the incremental names. So I think these two look pretty good, and Mahindra Finance has not really done all that well in terms of performance, also in terms of the stock price, but that also looks pretty interesting, slightly on a longer term basis.
Right. In terms of IT, do you think buybacks will continue to keep the stock pretty active? So earnings growth has been muted, and no brokerage house is expecting any great growth of earnings. That's why probably valuations are the way they are. But do you think with the buyback trend that TCS has started, you think that will continue and that will keep giving yields of 2-3% back to the investors?
Sure, I think that buyback will at least help to define what is a floor price, and this will also act as a good tailwind, because as what you very rightly said, that nobody is expecting anything great on the environment or even on the part of the earnings. So if that really if there's some clarity on that, possibly it will get compounded in a very positive way. But for the time being, I think yes, the buybacks and the excess cash which is going to be returned back to the shareholders will help company improve the ROEs and also the overall valuations in terms of the EPS, and I think will help companies to define their floor price.
Right. So, we've spoken about banks, we've spoken about Reliance into oil and gas space. Any other large cap names that you like?
Well, I think we have spoken quite a bit. I think in the pharma segment, I would still go for something like a Lupin. I would still go for something like an Aurobindo Pharma and Glenmark. I think some of these names also look pretty good and interesting. And Sun Pharma, of course, is one of those stocks which you always buy when the chips are down. And that also is something like an HDFC Bank. It's always a part of the core portfolio. So apart from that, I think these 2-3 names really look pretty interesting from the current levels.
Right. Just a word on pharma. You think that, you mentioned, of course, about your picks. But what do you think is the theme in pharma? You think most of the large cap companies in the pharma pack have adjusted to the change in norms for what's happening with USFDA?
Pankaj, my take is that this USFDA, whatever is happening, will really be very good for some of the frontline pharma companies whom we know have very good and solid management. So, the learning will be pretty fast, and possibly they will not make the same kind of, possibly if you can call them mistakes or errors. So, what possibly has been observed by USFDA in some of these companies. So, I think it's a good thing that what some of these pharma companies are going through, and their learning curve should be pretty good, and that, in my opinion, will be very good and very solid for the frontline pharma companies in the long run. I'm not too worried about USFDA really, ambushing some of the stocks and the way it takes it down. I'm not really worried about that.
Mr. Bhatt, thank you so much for taking out time for us. Always good to get a perspective from you. The picks at Prabhudas Lilladher, very, very focused on valuations. Names like Axis Bank, Reliance, which are cheap versus the market valuation, is where essentially they believe delta can be created.